on one hand, there is a learning curve to investing in real estate. It's almost its own language in a way. And then when you layer on these syndications and funds, now there's a private equity component to these deals. It gets even more complicated. So there's a base level of understanding that you need as a passive investor.
Welcome to the Peak Profits Podcast, your guide to maximizing returns in passive real estate investing. Hosted by Brian Morris and Chris Ward of 7 Peak Capital, we dive into conversations with industry experts, sharing insights, strategies, and stories to elevate your investment portfolio. Whether you're a seasoned investor or just starting out, this podcast is designed to give you the edge for financial freedom. Get ready to unlock new opportunities, discover the secrets of successful investing, and take your passive real estate investments to the next level. Now, let's go reach those peak profits together.
Welcome back to Peak Profits. Today we are joined by TJ Burns, the founder of Burns Capital Partners. TJ has an incredible background, having started in his career in technology as a lead mechanical designer at Blink, which was later acquired by Amazon, where he has worked as a senior product design engineer for the past 7 years. He holds a degree in mechanical engineering from MIT and has over 20 design patents in consumer electronics. In 2022, TJ transitioned into real estate investing and founded Burns Capital Partners. Since then, he's raised over $6 million in investor capital and has invested as a limited partner in 17 private placements. His focus spans across multifamily, private credit, short-term rentals, making him an expert in bridging the gap between professionals in technology and real estate investing. Recently, TJ left his role at Amazon to pursue building capital partners full-time. We're excited to hear about TJ's journey, his strategies for raising capital, and how he's helping tech professionals find opportunities in real estate. TJ, welcome to Peak Profits. We're excited to have you on.
That was a great intro. I really appreciate that. Thanks, Brian. And thank you, Chris, both of you, for having me here. Very excited to be here.
Absolutely. No, I know we've met several months back, and since we've met and connected, been very fascinated by your journey so far, not only in technology, similar to what Chris and I are doing with our W-2s, but what you've built so far with Burns Capital Partners. So would love for you to introduce yourself a little bit more than the intro and kind of what you're doing and how you got into the industry.
Absolutely. So like you said, my background's in tech. I got a job at a small startup right out of college. And while I loved the work, I pretty soon realized that I didn't want to be in a W-2 for the rest of my life. I walked into my cubicle, I instantly felt claustrophobic. And from that moment on, I started looking at other ways that I could build wealth, other ways that I could invest, and eventually start my own business and be my own boss. So for a long time, I looked into different facets of real estate investing, and I read a lot of books and podcasts. And it was about 4 years ago that I started trying different ways to invest. So I bought a single family home out of state. I got my real estate sales license and sold a few houses. I did the house hack thing and bought some small multifamily where I live, self-managed that. And I also stumbled across a wallet one day, just walking down the street. And that, long story short, got me into the business of syndications and funds, and made a number of investments into various different operators in different markets and asset classes, and found that was the best way for me to invest as a person in tech that had a busy schedule, that lived in an expensive market, and stuck with that. And then eventually was able to grow that into a business. And for the last 2.5 years, that's what I've been doing with my business, Burns Capital Partners. We help people in tech, get into syndications, funds, people that want to passively invest. And recently, like you said, I just left my W-2 at Amazon to do this full time.
That's an incredible background, TJ. And ultimately the journey of really starting buying a single family home out of state, going through and getting your licenses, multifamilies, managing it yourself, finding a wallet. I need to hear a little bit more about finding a wallet somewhere, and ultimately that brings you to syndications. Like, tell us what happened with that story. What was in this wallet that you found? Was it a person's wallet that you found and they just happened to be an operator? Like, tell us a little bit more about that.
So when I was living in Boston, I was walking back from a friend's house one Saturday night. It was December of 2019, so it was a cold Boston day. And as I'm walking back, I come across a lump in the road. And from a distance, I don't know what it is. So I go up to it. Looks a little abnormal. It turns out it's somebody's wallet. And um, like any good Samaritan, I picked up the wallet thinking I was going to return it to the person who it belonged to. So opened it up, looked at the license, and went on to Instagram to see if I can track the person down. And instead of a typical profile, what I found was a real estate page. So this person, they were about the same age as me. And instead of going off and getting a traditional corporate job, they had decided that they were going to go buy real estate and just figure out how to do it. Started with no money, just was able to find good deals and finance them well, roll the profits of one deal into the next. And when I found them, they were at about 60 units in a market up in New Hampshire. And I was hooked. I read through their entire page, saw all their struggles, their failures, their wins, and just wanted to be doing what they were doing. But the problem was I didn't really have much experience. And I figured somebody like that, they're probably very busy. And if I don't have anything to offer them besides their wallet, which is a good start, that they probably didn't have time to talk to me. So I racked my brain on ways that I could add some value to what they were doing, and in return, learn from them, maybe do a deal with them at some point. And the only thing I came up with was I could invest some money with them. I was working at Amazon. I was making a good salary. I could take some of that and I could invest it with them. Perhaps that would be valuable. So when we met up, I proposed that to them. Little did I know that their whole network was real estate investors, and somebody investing into their deals was actually rare and exciting, and exactly what they were looking for. So we struck up a friendship after that, and maybe 9 months later, we did our first deal and did another deal after that. And then when I started my business, that was my first partner, where we actively did the deal together, me as a junior partner, them leading the way. And to date, it's one of my best contacts in the business. We still do deals together, so it really worked out well.
So it really does pay off to pick up some wallets randomly on the street and search Instagram for them, and ultimately find out who it is. That's an incredible story.
And we've joked too that if you're somebody that's looking to attract other people or market yourself, maybe you should start leaving wallets everywhere with fake licenses that point back to you.
Start dropping wallets all over the streets of New York and see who calls me. Right. No, that's crazy. That's an incredible story. I mean, it almost seems like destiny, that you met that person, that your journey kind of took you into that syndication path by finding just a wallet on the road. And obviously you had some previous background and history in real estate by, trying to figure this thing out yourself. Right. A lot of people are in a similar boat where, they know they should be investing in real estate to some capacity, but don't know how to start, don't know where to start. It's intimidating to think about. And you kind of figured out that path yourself in the beginning, it sounds like, before deciding on, raising money through the fund and going the syndication route. You're obviously a smart guy. You went to MIT. You have quite the background in your own profession. You could have happily stayed in technology, made a great earning and living for yourself. You have all the degrees and the background history. Why did you ultimately decide real estate was an industry that you wanted to pursue in the beginning? Obviously, you mentioned it briefly in the beginning, but why transition away from such a great industry and a great position to ultimately think about getting into real estate at all?
It's a great question, because in the beginning, I loved working as an engineer, and I grew up as a kid always wanting to be an engineer. I loved to build things, and my dream job was to work on consumer electronics devices, things like the Apple, like an iPhone. Although I didn't get hired at Apple, they rejected me. No hard feelings, but I ended up with a job that was I was making stuff that I'd go into Home Depot and I'd see it on the shelves. I'd go into Best Buy and I'd walk down the street and I'd see it on their houses. I think what attracted me to real estate was fundamentally just freedom. So while I was doing all these cool things, and I loved the team I worked with, I was still constrained to, working in an office, to working certain hours of the day, to having to do things that other people, told me to do, as that's how it works. Right. And I wanted to go do my own thing. I wanted to be my own boss and make decisions for myself. I wanted the risk associated with doing that, and the responsibility and the reward. So in the beginning, it was all about freedom, and my focus was not just on real estate, but investing in other things like index funds and learning about all different ways to start businesses. And towards the end of my tenure as an engineer, it really changed to being about growth, like personal growth, where I had reached a point where I had a good amount of freedom. I had a lot of seniority in my position. I worked from home exclusively. My job was it was easier than it was in the beginning because I had the reps at that point, but I had totally stopped growing as a person. And for me, it just ate at me all day long. It was very hard for me to get my job done. I was getting paid more money than I'd ever been paid in my life, and had no complaints there, but was still felt pretty miserable. So, and then on the flip side, I'd go and I'd work in my business at night and in the morning, and maybe sometimes during the day, but don't tell. I guess I could maybe say that now, but
Yeah.
just being honest. And I loved it. I absolutely loved what I was doing, and I saw the comparison between the two. There really was no comparison, and I was like, man, I don't want to be in a job where I don't like it anymore. I felt bad saying that because it was such a good position, but ultimately I wanted to do something where I was excited every single day to wake up and get after it.
Yeah, it's a really interesting point you make there, because again, what drives and motivates people does change over time. Like you mentioned, freedom was the initial piece, and then it became growth. You were earning a very, very good wage, a wage that most people would probably dream of, right? So again, money isn't always the motivator behind a lot of this. How did it really feel when you were putting together your resignation letter? What was that day like when you handed that in? And what was your first day of truly no longer having to work a W-2? What did you feel that morning when you woke up and it was, I no longer have to wake up and open my Amazon laptop?
For a long time, I thought that there would be some epiphany associated with leaving the job. Like there'd be some reward to it. The truth is there wasn't. It felt like any other day, and I didn't even take a day off. I got right to work on my business, and the decision that was made, it wasn't something I made easily. It wasn't like I woke up one day and said, "Hey, I'm going to resign today and I'm done." It was something that I thought about for years, multiple years, and by the time I actually had the courage to talk to my boss and his boss and tell them how I actually felt and that I was going to leave, the decision had already been made in my head. So the transition was gradual. It was over many years. And then by the time I actually took the action and I was handing my laptop in and I'm done and I'm no longer doing that. It had felt like I had already been doing this for just exclusively working on my business forever. And now looking back, it hasn't been that long. It's been about 2 months. It feels natural. Like it honestly feels a bit like a distant memory that I was working at Amazon. But I feel like I did everything I wanted to do in that chapter, and that it was more than time to move on to the next chapter. But yeah, to my first point, people think there's some reward, there's some you hit nirvana and then things feel better, whether that's a number you hit or, leaving the job or some milestone in your life. For me, it's never been like that. I always think it's going to be like that, but then it doesn't feel like that in the moment. It's more to be completely cliche, it's always been more about the journey, I suppose.
Yeah, that's awesome. And honestly, you talk about this next chapter, and I'm sure you will continue to scale and grow and build Burns even quicker now that you can focus on it full time. And your background with all the success you've had, I have no doubt that you will continue to do so. But with that, you've balanced both jobs for quite some time. We mentioned you started Burns Capital Partners in 2022 with the focus seemingly around the avatar being that tech employee, someone working in technology that might make a good living or might make a good wage, and you're targeting them as an avatar to invest with you in real estate deals. So can you bring us back to the time, maybe a two-part question. Why did you feel starting a private equity business like Burns Capital Partners where you're going to invest money into real estate deals, and then why was your avatar and your target audience that technology employee?
To start with the second question, what I realized was that the best way to build a business is to help the person you used to be. And for me, that was the tech employee. It was the person that was looking to invest in real estate, didn't have the expertise, didn't have the connections, didn't have the time to go find my own deals, but really wanted to diversify. It was very heavy into my company stock, into index funds, and also wanted to learn, so wanted to learn alongside someone that was experienced. And I found in my journey, it was very helpful to invest in syndications, and I learned a lot through it. But I also found that there was something lacking, like the service that I was getting in some syndications, which, of course, never mention names, and a lot of them were great, but I invested in a whole bunch of different ones. I felt like, I think this is something I can do, where I can offer a better service to people like myself. I can potentially do better deals, or at least communicate better and more frequently. I can explain things better and be an educator for folks like myself. I felt like there was an opportunity there. And then, I just love the business too. I found when I was investing as an LP, I would ask a ton of questions just out of curiosity and interest. And it didn't seem like other people were as interested in this stuff. They'd invest as a limited partner because they wanted something passive. And I have investors tell me that now, where I'll send them like a 50-page report, and they'll be like, yeah, that's cool, TJ. And I appreciate it. I'm glad you're reading it, but I'm doing this because I don't want extra work and I trust you, So, yeah, it was all those things.
Yeah. The education side, I think, is often overlooked, right? So you give a prime example there, really, of people want this for the passiveness of it, and they're not necessarily reading every 50-page report that you send. But at the same time, they also want to know what's going on with their money, how it's being utilized, what they can expect in terms of their returns. So how do you go about educating and teaching those tech professionals about the benefits of real estate? And also, what are some of the most common misconceptions that you hear?
That's a great question. And it's a bit of a dance, because on one hand, there is a learning curve to investing in real estate. It's almost its own language in a way. And then when you layer on these syndications and funds, now there's a private equity component to these deals. It gets even more complicated. So there's a base level of understanding that you need as a passive investor to accurately vet deals and know what you're getting into. But at the same time, you want to be passive. So you don't want it to become another job for you, right? And for me, I'm very conscious of that. I try to put out material that simplifies things. So I'm pretty big on LinkedIn, and that's where I meet a lot of potential investors and other active investors. And I put out material on LinkedIn that is stuff that I think I would have found valuable 3 years ago. So, I'll write about my own experiences and how that relates to things people should know in the business, right? And And then I have other ways to educate people. I have an email list. I've put together some longer form content pieces like articles and an ebook. But it's always an improvement process to continue to put out good material and make sure that it's packaged in a way where people aren't going to get bored of it, or their eyes aren't going to glaze over and they're going to move on. Right. Your second question, I just remembered, misconceptions about real estate. I think one of the big ones is a lot of people don't realize you can passively invest in deals, and they might also not realize the pros and cons of passively investing, actively investing. One of the first questions I ask people is, do you want to be an active investor or do you want to passively invest? Because if they want to be active and they want to build their own real estate business, then that's great. And I want them to go do that. What I do isn't for them. But a lot of folks, they'll start on the active side, whether they go and they buy a property and they manage it themselves, or they move out of their residence and then they manage that. And they quickly realize that real estate's not a passive game. If you're an active real estate investor, it's very active, right? It's not, you're not just going to sit back and collect checks. There's going to be problems that come up. You're going to deal with tenants. You're going to deal with, maintenance requests and things falling apart and leasing and sourcing debt and everything else that comes with the business. And it's a job. It's really, truly a job. And some people can manage that with a full-time job, but many people get stuck there because they truly don't have any time to do anything outside of their W-2 and their family obligations. And they think the only way is to go and find some time and buy their own properties.
Yeah, and that's totally true. I'm sure you experienced that yourself in the beginning when you're getting your feet wet in the industry with single family and multifamily. And similar to my journey, buying a single family and a small multifamily, it is very active, and there's a lot of components to it, right? To identifying and buying properties, but then managing the properties ongoing. And I feel like we have a similar path. So the next question I wanted to ask, maybe kind of selfishly, because Chris and I are building, 7P Capital, similarly to how you're building Burns Capital Partners, and you've now raised over $6 million in the matter of 2 years, which is no small number, right? You've obviously had success, and now you've taken your job from Amazon to take this on full time with the confidence of knowing that you can scale this fully. So what do you see when you identify potential investors, many that you probably don't know or have a relationship with? So what are some of those techniques and strategies that you go about, maybe identifying people on LinkedIn to ideally having that first intro call, right? Mm-hmm. Who's TJ Burns? How do you build trust with someone who's never even talked to you before, and now you're asking them for $100,000 to invest in your deal, right? Or potentially more. So how are you, identifying and building trust with investors, and then ultimately nurturing an investor to invest with you?
It's the $100 million question right there.
Not easy.
So as I told you guys, my background's in engineering. I never had to sell anybody on anything. Actually, they would sell me on stuff all the time. So learning that side of the business has been one of the most interesting parts of it all for me. I love to learn new things, and it's all brand new. Thankfully, I've had a couple years practice at this point. So the top of the funnel for me is LinkedIn. That's where I put out free content. I try to make it specific to my avatar, which is who I was 3 years ago. I try to make it helpful, so things that I've learned in the business. Sometimes I throw in things related to how I felt about, my job as a W-2 and ultimately my why of leaving and investing in real estate. And that's all done purposefully to attract people like myself, people that work in tech that are thinking about investing in real estate. They don't have the channels to do so right now. Maybe they don't have the education. They don't know anybody in the business. And social media is fantastic for that. One, it's free, which is amazing. And two, you can reach quite a lot of people. Like I've had some posts where I've, reached 300, 400,000 people in a post. And if you do it consistently, it builds up over time. So that's been like one top of the funnel spot. When I was at Amazon, I would also network with a lot of other real estate folks within Amazon. They have private Slack channels and whatnot. And then now I get more referrals from existing investors as my business has matured. But then once people once they know that I exist and they can see my content and some subset of that will like what I'm posting, they kind of auto opt in. So it's not even like I'm reaching out to them. It's that they're finding me, and then I have to give them a way to join my circle, so sign up for my email list, check out my website. Here's a free resource, all those things. Right. And then in exchange, now I have their contact info, so I can reach out to them and start to build that relationship, whether I'm doing that by email, where I'm sending monthly or every other week emails, continuing to nurture the relationship and teach them about what I'm doing, maybe sharing deals we've done, lessons I've learned. And it's all done in a way up until they reach out to me where there's no obligation. Like, I don't even know that they exist yet. Right. So they don't feel any pressure. And then there's always the option for them, if they do want to talk with me, to book a call or to schedule some time. Now, when I'm doing an active raise, it's a little bit more aggressive, right? So like I'm actually actively reaching out to people that I haven't heard from yet, right? But I think the important thing is it's for me, it's all done in a way where I'm not trying to make the decision for anybody, right? I'm just trying to give them the information that they need to make the best decision for themselves. And the distinction is I think really important, because I know that what I offer is what many people are looking for in the shoes that I was in 3 years ago. And I know that because that's where I was, right? So for me, it's all about, I just got to find those people that exist, that those 10, 20, 30,000 people that exist that are looking for exactly what I offer. And then I have to continue to nurture and educate them until they have enough information to take the next step.
I think one of the really, really powerful things that you've mentioned there, TJ, is that it's almost a no pressure environment, right? You are simply facilitating an investment opportunity to people that maybe didn't know this existed in the past. And whether people decide to invest or not, it really is entirely up to them, right? Like, you just want to give them the opportunity that if they ultimately do want to do this, you're providing them that vehicle to go ahead, diversify their portfolio out of stocks, bonds, mutual funds, etc. Right? So I think that's such a powerful piece of real estate investing through syndications. The stress-free nature of how all of that overall kind of process works. It is really why this is so beneficial. I guess the question I've got for you, TJ, is when people are more familiar in investing in stocks, either through their W-2 or whether they go out and use a mutual fund or it's an employee stock purchase program versus investing in real estate, like, what are the most common things that you have to explain to people that are different?
Well, like I said earlier, there's a bit of a learning curve to investing privately. The process is a bit different. There's legal documents that you have to read that sound pretty scary. They list all the risks of the things that we do. The liquidity aspect is something that's new to people because we live in a time where things are pretty much instant, including the stock market or even something like crypto that trades 24/7. With these real estate investments, what we consider more liquid is like a year lockup period, right? So that might be like a debt fund. But a lot of the deals that we do on the multifamily side are 5 years or more. So it's a bit bigger of a decision. And then there's also higher minimums. It really doesn't make sense for somebody to write a check that's smaller than 25,000 at the minimum and more often 50,000. because there's some added complexity with their taxes. Now they get a new tax document. It's another thing they have to worry about and track. There's expenses on our end as well for more investors that we bring in. So those are all things to consider. To your earlier point, I'd say too that what I look for is to find reasons why this isn't right for people. I tell people all the time when I'm talking with them, I'll say, hey, I don't think this is for you, or this deal isn't fitting like what you're looking for. Right. And for me, like, it's also important to try to just get to a resolution. Whether it's yes or no, it doesn't really matter to me, because I know there's plenty of people out there that it is right for. But my job is almost as like a trusted advisor to help people get off the fence if they're on the fence.
That's a great way to put it too. And to your point, right, you're presenting an opportunity. It's their ultimate decision if they want to invest in something like this. And you're trying to guide them both the pros and cons as to investing privately and investing in real estate. And depending even on their investment strategy, are they more cash flow heavy, where a debt fund might make more sense? Or are they looking to build that nest egg where an equity play or a long-term, 5 to 7 year project might make more sense with more equity on the back end, right? So to touch on that, you've invested in 17 total deals. There might be more now. I'm not totally sure, but from you do invest in certain verticals, right? So I know you most recently offered a debt fund in addition to doing short-term rentals and multifamily. Can you touch a little bit on the different vehicles that you've invested in and some of the key components as to why you offer a couple different investments?
So I put it into two buckets. It's equity investments and then it's debt. So it's really just a difference of where you are in the capital stack. And the reason I differentiate them is because they're useful for different investors, like you said. So people that are looking for more cash flow, people that are looking for more liquidity, people that care less about the tax benefits. The debt funds are better for those people. And also folks that care more about volatility and are looking for something a little bit more stable, so like people that are planning to retire soon, right? Like I would suggest that they look more into investments that are lower on the capital stack, lending where things are less volatile. And then on the equity side, it's more for folks that maybe they're at the peak of their careers and they're already paying a lot in taxes and they're just looking to grow wealth as fast as they can. They're a little bit more tax sensitive, right? So deals like that perhaps are that's more for like people looking into equity deals, multifamily, short-term rentals. For me, it's always been about one, finding a small group of people that I trust and that I think have great competitive advantages in whatever they're doing and working with them long-term. So I've actually been narrowing my focus as time has gone on. Right now, only doing multifamily in one or two markets, and have two partners on the lending side or the private credit side that I work with. And it takes me a while to find new partners because I always like to invest my own money first with a partner. So I'll go through due diligence just in making an investment with my own cash, and then I'll make that investment and I'll let that play out for a bit. And then eventually, if that goes well and due diligence continues to go well, then perhaps there's an opportunity for us to partner together. But as you can imagine, that's a multi-year process. So the circle has been pretty small in terms of who I've worked with, and it'll probably take a while to grow that.
Yeah, I think one of the important things for investors is understanding where you're in the picture as well, right? Do you have skin in the game, as people would say, with these? But you've also been almost on both sides of the table. You're investing as a limited partner, but you're also raising the money as a syndicator. What do you feel are some key questions that limited partners should be asking the syndicators that would help them as they go through their due diligence of identifying the right investment or the right people to make those investments with?
I think understanding the downside is really important. So that's a question I always ask, and I want LPs to understand is what's the worst case scenario here, and how do we get there? What are the key components of this deal that we're most worried about? Whether that's the debt, or if it's lending, the borrower risk, or if it's an equity deal, the rents that we're getting and how variable those are. But usually there's like 3 or 4 key things that you want to understand. So I think if you understand the downside, the upside usually takes care of itself. And I know a lot of LPs that filter deals by IRR, or they look for the deals that are going to yield the most. And I think that's a mistake, right? Like, I think what ends up happening is you filter out a lot of deals that are done conservatively with great operators, and you probably index more towards risky deals just by doing that.
Yeah, I like how you just started answering that question. It was almost approaching the risk first, right? With what could potentially go wrong, and let's talk about that, because a lot of people don't want to talk about where's the risk in this investment, how can I lose my money, right? Like, how risky could it be? They all just want to flaunt how good of an investment this could be in our 40% IRR numbers that we can sell in 2 years. And right, it's all market thing, right? Sometimes the market could be like, right now we're in a time where it's a little bit of a trough, and it's more about operational excellence than it is right with riding the wave of rent increases. So I wanted to touch a little bit about you just mentioned it briefly, but determining your partners. So people invest with you, and you're partnering with operating partners that are running these properties. You've identified some. What are you looking for in operating partners that make you feel confident in your relationship to ultimately invest your money first, and then bring in investors to invest with those partners as well?
So I put out an email this morning to my list on one of the deals that we did. We bought it. We went under contract February of 2022. We bought it in April of 2022. You might remember what was going on then.
The interest rates skyrocketed.
Yeah, interest rates went way up, and what happened was we made a few mistakes on that deal, and I think it's important to see people operating when things are tough, right? You kind of really learn who you're partnered with when things don't go according to plan or up and to the right. With that deal, we had some challenges, right? Like that was the only deal we ever bought with floating rate bridge debt, which you guys both know that a lot of people have had issues with that over the last few years. It's actually sunk a number of deals, and people have lost millions of dollars, all the money that they've raised. In this case, it was a speed bump. We bought the property at a great price, and we had to refinance it 6 months in, after we completed a number of CapEx upgrades. But it was a challenge, right? Like, that was an uncertain time, and I got to see how my partner operated during that, and how he kept his cool and just was straight business, right? So that's all real important. Next thing happened, we paid off our preferred equity that we raised, and while it felt like a good move at the time, it left our operating account pretty much at zero, right? So what did my partner do? Well, he made a big loan to the partnership at 0% with his own money to keep the ship running. And I was ready to write the next check, but we never had to get that far. For me, that holds a lot of weight, right? So not only is somebody, and this is somebody who put a lot of money in as the LP on the LP side to start. So not only did he do that, he put up his cash from the beginning with the people he raised money from. And then the deal started having some challenges, and he navigated through those. And then he put even more money in at a 0% return, right? So effectively losing money, just so that we wouldn't have to do a capital call or raise outside capital. And ultimately, it worked. We were able to increase NOI pretty substantially, get back into a cash flow positive position. We'll probably sell the deal next year for a modest return to investors, but we'll see how that all plays out. I don't have the crystal ball. And that whole experience, it means more to me than some of the deals that I've done with that partner where we've knocked it out of the park and we've hit those, triple digit IRRs. Because that's fine. Like that stuff that'll happen in real estate if you're in the game long enough, and sometimes the market will pick you up, but it goes both ways. And
Right.
and I want to see what happens when things go bad. Like, are you going to stay in the foxhole with me and fight it out? And are we going to put more money into this out of our own pockets? Because that's how I want to run my business, right? Like I want to stand by what I'm doing. There's not everybody would do that, like, so some partners I've seen, they don't do that. Right. So finding those people is the most important thing for me and what I'm doing.
Yeah, that's definitely a scary situation to be in, and that timing probably couldn't have been really any worse, right? Like that was smack bang at the time. What probably felt like the sky was falling. My next question was almost going to be, what was one of the biggest lessons that you've learned? But I feel like that might be up there with one of the biggest lessons that you've learned. But I'm going to ask it anyway. Like, what is the biggest lesson that you've learned, either as a limited partner investing in deals or as someone who is working with limited partners in deals?
So when I started investing as an LP, there were a lot of things I didn't know. I didn't really understand debt. I didn't understand the impact of fees on deals. I didn't know what the capital stack was or what preferred equity was. Basically didn't really know much. And I thought I was investing in real estate, but I was actually investing in private equity, as you do with syndications. And the whole thing just taught me that there's a lot of stuff out there that like I don't know, right? And that's where the biggest risk is. It's in the things you don't know, because you can understand the things that you know and are familiar with, and you can quantify that risk. But the rest of it has to come with experience, right? And the minute somebody starts to get cocky about what they're doing and feels like they can't make a mistake is probably when your business starts to take a decline. So for me, it reminds me of, if you ever seen the Dunning-Kruger effect, the curve they have, where I posted something on LinkedIn maybe about a week ago on it, but it's confidence on the y-axis, and then it's competence on the x-axis. And as you gain competence, you have this huge jump in confidence where you think you know everything at first and you really don't know anything. They call that the mountain of stupidity, right? And then you get brought back down to earth and realize that there's a lot of stuff out there that you actually don't know. And then it's a gradual increase towards becoming an expert, So for me, like, remembering that is important. This is a game of constant learning. And I was on the phone with somebody this morning. He's been in the business for 45 years. He owns, over 100 million in real estate. He's 76 now, and he's looking to just pass the lessons down to the younger generation. And I was telling him the same thing. I'm like, hey, I don't have any experience compared to you. You've been doing this so long. I wasn't even born. So please, tell me what you know. Introduce me to the people you know. I'm all ears.
Yeah, that's great advice too. And it's naive to think that you know it all. No matter where you are in your journey, you could always be learning. There's always adaptations to what you do know or how you can learn things. And I think that's a great point. And I think that shows a lot about your character to be able to speak about that. And so we've talked about a little bit of your past journey so far and what you've done with Burns Capital Partners. And now you mentioned 2 months ago taking that leap to go full time. So that's definitely exciting. You're doing this full time now. You're continuing to grow the business. Where do you see the business going from here? Right, you have all the time in the world to grow it. I know you have a wife, I believe, kids as well. So more time with the family. Where are you going to take Burns Capital Partners, and what does it look like moving forward?
Yeah, I just want to keep doing what I love to do every single day, and that right now I'm doing that. Right, sometimes I lose track of how long I work, and that's probably an issue too. Because I'll go downstairs before I go to bed to do the dishes, and then I'll end up doing 3 hours of work. But I just want to keep working on my business and growing it, and trying to do right by my LPs and my partners, and the vanity metrics like money raised and AUM and things like that are great, and they're important for marketing, and I'll definitely tout them as well, like anybody else. But at the end of the day, I just want to keep playing the game. That's the goal.
Yeah, that's incredible. Again, the fact that you're going down to do the dishes and you end up spending 3 hours doing some more work.
It happened last night. Yeah, it's supposed to be 30 minutes, and I looked up. I was like, "Whoa, it's been 3 hours."
I think I
enjoy
saw
what you do.
your Instagram post the other day and it looked pitch black, just your laptop sat there on the side. That may have been just after the dishes. Actually, it might have been yesterday that you posted that. I guess the only thing I would really ask, TJ, is what you've given us a lot of advice, a lot of guidance. You've kind of talked us through your story, your journey. But if there was one piece, like the golden nugget, the $1 million question, like what piece of advice would you give to the listeners?
Well, I'll give one for building a business, and then the other one just personal, which is exactly what I just said. Find something you love to do, and just do that. I put something out today where when I was in engineering, I got to a point where I felt like I was burned out, and honestly felt like that I wouldn't find a job that I just did effortlessly ever again. I just felt like I was past that, and I had to accept that work is work, right? But then ever since I've been doing this business, sure, there are days where I don't want to work, and maybe I don't, but vast majority of days I love what I do. And I think for everybody out there, there's something that you can find that is what you can do effortlessly, and you should seek that, right? On the business side, the North Star for my business is trying to, it's trying to keep the customer first. It's trying to be valuable, to help people, right? So we had something the other day where for one of our funds, there's like an early withdrawal penalty, and it's baked into the deal, and everybody understands it, and they sign it, and it's all agreed upon, right? I had an investor who had to pull some cash out, had something come up, and he was going to pay the fee. He was fine with it. And I actually asked the young guy who works for me what we should do. I was like, should we charge the fee? Should we not? He knows what my books look like. I'm not making millions over here, and we could use the cash to deploy into building the business. And he's like, no, I think you should give it back. Give it back. It'll come back to us in multiples. Just customer first. And it was a great reminder. Like, hey, if you treat your customers well, if you put them first, if you give, then things will come back to you. So I think that would be my advice is, try to maintain a giving mentality and know that if you do that, things will come back to you in multiples.
Yeah, that's great advice. And I think there's no surprise as to, one, why you've raised $6 million so far and why you'll continue to raise, I'm sure, 100 million plus, whatever your goal may be as you continue to grow this thing. And you come across as a very genuine, trustworthy individual who's trying to do right by your investors while you grow a business for your family and yourself. So again, you've provided a ton of good information today for not only listeners who are trying to potentially build a business, but a lot of investors who might be thinking about taking the jump as an LP or diversifying their portfolio. So where can people go to find you? You mentioned LinkedIn. That's where Chris and I both found you. So you're doing a great job there in that avenue. So where can people go to find TJ and reach out and get in contact with you?
Yeah. In addition to LinkedIn, you can go to my website, burnscapital.co. We don't have enough money to buy the .com yet, but maybe one day. And if you go there, you can get on my email list, and then get in contact with me if you want to chat. We got some stuff going on right now. We're taking down a 72 unit building up in New Hampshire with that same partner from the beginning that I found his wallet. We're bringing on investors for it. And if that's not you, if you're looking for investments in lending, then we got some stuff going on there too. So we'd love to hear from you.
TJ, just want to say a huge thank you. This has been amazing. The insight you've shared has been incredible. I've probably got 4 or 5 things already on my list that I can action from this. Again, just want to reiterate one of the things you said right at the start, and I think you've commented on that a number of times, which is growth. Like, you can really see the way that you continue to talk, not pretending to know it all, right? Like, a lot of that is around growth. So again, I think that it's such a powerful piece of your why is just continuing to grow, and it's just great to see and great to hear. So just really want to say thank you for sharing your story. It's been powerful. It's inspiring, actually, and again, like you said, Brian and I are trying to do this as well. So seeing the steps you've gone through and seeing what you've been able to achieve is just amazing. So just want to say another thank you from us both.
I appreciate you guys. Thanks for having me.
Of course. Talk soon.
Thank you for tuning in to the Peak Profits Podcast. We hope today's episode was not only inspiring, but packed with actionable insights for your passive real estate investments. Subscribe so you never miss an episode. And if you enjoyed the show, please leave us a review. Your feedback fuels our passion to bring you even more valuable content. Stay connected with us on social media and visit 7peakcapital.com for exclusive resources and updates. Until next time, keep striving towards your financial goals, and let's reach new peaks together.